The stock market is a platform where publicly traded companies' stocks and other securities are bought and sold. When an individual buys a stock, they are essentially buying a small ownership stake in the company, and they have the potential to earn a return on their investment if the company performs well. In addition to stocks, other securities traded on the stock market include bonds and mutual funds. Bonds are a form of debt where an investor lends money to a company or government entity in exchange for regular interest payments and the return of their initial investment at a set date in the future. Mutual funds, on the other hand, are investment vehicles that pool money from multiple investors to buy a diverse portfolio of stocks, bonds, and other securities. The stock market is a complex system that is influenced by a variety of factors, including economic indicators, geopolitical events, and company earnings reports. Investors can make informed investment decisions by analyzing financial statements, staying up to date on market trends, and following expert advice. Overall, the stock market offers opportunities for both long-term and short-term investments, but it's important to understand the risks involved and to have a well-diversified portfolio. Market trends and predictions are important indicators that help investors make informed decisions about their investments. A market trend refers to the overall direction in which the stock market is moving, either upward or downward. To understand current market trends, investors need to consider a range of factors that can impact the market, such as economic indicators, geopolitical events, and company earnings reports. Economic indicators include metrics like gross domestic product, GDP, inflation, and unemployment rates. These indicators can provide insight into the health of the economy and how it may impact the stock market. Geopolitical events, such as trade negotiations or political instability in different regions of the world, can also impact the stock market. Changes in government policies, such as tax reform or interest rate changes, can also have a significant impact on market trends. In addition to these factors, company earnings reports provide valuable insight into the performance of individual companies and their potential for growth. When a company reports strong earnings, it can lead to increased investor confidence and potentially drive up stock prices. By analyzing these various factors and making predictions about how they may impact the market, investors can make informed decisions about which stocks to invest in and when to buy or sell. However, it's important to keep in mind that market predictions are not always accurate and that investing involves risk. It's crucial for investors to stay informed and to have a well-diversified portfolio to help manage risk. Investors are often interested in identifying the hot sectors and industries in the stock market that are likely to experience significant growth and attract investment. These sectors and industries may include areas such as technology, healthcare, renewable energy, or e-commerce, among others. Within these hot sectors, certain companies may be performing particularly well and have strong growth potential. By analyzing the financial statements and business models of these companies, investors can identify promising investment opportunities. For example, in the technology sector, companies such as Apple, Amazon, or Google may be considered leaders and have strong growth potential. In the healthcare sector, companies such as Johnson & Johnson, Pfizer, or Merck may be promising investment opportunities. It is important to note that hot sectors and industries can change over time as the market evolves and new technologies and trends emerge. As such, investors should conduct regular research to stay up to date with the latest developments in the market and adjust their investment strategies accordingly. When it comes to investing in the stock market, analyzing the financial statements and business models of specific companies can be a valuable tool for identifying potential investment opportunities. Investors can look at key financial metrics such as revenue growth, earnings per share, and profit margins to gauge a company's financial health and performance. In addition, understanding a company's business model, including their competitive advantages, industry trends, and management team, can help investors determine whether a company has strong growth potential and is positioned for long-term success. Once investors have identified companies that they believe have strong growth potential, they can make stock picks by assessing factors such as valuation, market trends, and potential risks. It's important to remember that investing in individual stocks comes with risks and requires careful consideration and research. Investing in the stock market can be a complex and challenging process, but there are several strategies and tips that can help investors make informed decisions and manage their risk. One important strategy is to diversify your portfolio, which means investing in a variety of different stocks and other securities to reduce risk and improve overall returns. Another key tip is to invest for the long term, as the stock market has historically provided strong returns over the long term despite short-term fluctuations and market volatility. Managing risk is also essential when investing in the stock market. It's important to understand your risk tolerance and to manage risk accordingly by diversifying your portfolio, investing in low-risk securities, or using strategies such as stop-loss orders to limit potential losses. To make informed investment decisions, it's important to do your research by reading financial statements and other relevant documents, following industry news and trends, and seeking out expert advice. Additionally, considering investing in index funds can offer broad market exposure and diversification, as well as lower costs and fees than actively managed funds. Other important tips for investing in the stock market include being patient, avoiding emotional decision-making, and having a well-defined investment plan that aligns with your goals and risk tolerance. By following these strategies and tips, investors can make informed decisions and potentially achieve their financial objectives in the stock market. Market news and events refer to current or breaking news or events that may impact the stock market in significant ways. This may include changes in government policies, mergers and acquisitions, or major company announcements. Such news and events can lead to changes in investor sentiment, which in turn may impact stock prices. It is important for investors to stay up to date with the latest news and developments in the market to make informed investment decisions. Additionally, it is also important to understand how to interpret and react to such news and events to avoid making impulsive decisions that may negatively impact an investor's portfolio. Keeping an eye on market news and events can help investors anticipate potential market shifts and make informed investment decisions. Analyzing historical market performance can provide valuable insights into current market conditions and help investors make informed decisions. By examining past trends and patterns, investors can gain a better understanding of how the stock market has responded to different economic, political, and social events over time. For example, studying the performance of the stock market during past recessions or periods of high inflation can help investors anticipate how the market may respond to similar conditions in the future. Likewise, examining past bull markets and bear markets can help investors identify potential opportunities and risks. By gaining a deeper understanding of historical market performance, investors can also develop a long-term perspective on their investments and avoid making short-sighted decisions based on short-term market fluctuations. This can help investors stay focused on their investment goals and avoid reacting impulsively to market events. Common myths and misconceptions. Address common myths and misconceptions about the stock market, such as the idea that it's only for wealthy investors or that it's too risky for most people to participate in. Would like this video? Please like, comment and subscribe for updating for more videos.